Hey everybody, this is John. Welcome to the free video and what we're looking at going into next week. What is important? Really, this is kind of the only chart that matters. Obviously, there's stock markets and things like that, but what's happening right now is that if the dollar is going higher, okay, stocks are essentially being repriced to the downside, and we have a Fed meeting next week. So if the dollar explodes higher, I would anticipate that stocks get into a world of hurt. Now, the spiders right now do have bearish signals all over the place. And, I mean, this is like a ledge to the downside here. Today, financials got hit. Take a look at financials here. You can see financials kind of in a free fall. Energy, not doing so hot. So the spiders aren't doing good. But if we look at the Qs, you can see there's a lot of positives there. And, of course, we have things like Apple looking good. We have things like Amazon looking good. We have Costco starting to put in a bottom. We have Tesla. Suddenly we got buyers. Priceline, about to get going to new highs here. So everything here on the Nasdaq actually looks good, but the S&Ps don't look so hot. So I could see something where we're going into next week where we've got bullish plays on some stocks like a Priceline and an Amazon and things like that too, and then bearish plays on others like financials and things like that as well. Of course, we do have a situation next week where we have a Fed meeting. Okay. So the other thing, obviously, that we're looking at here is the bond market, and the bond market's been soft. And on the days when the dollar is strong, okay, and the bonds are tanking, that's the day when I call it that's the risk-off day, and that's when stocks have been getting hit the hardest. Okay, now today the dollar is really strong, but and today's Friday, bonds actually managed to hold their own. It was it wasn't a great performance, and they didn't really do any reversals or anything like that. But if we get to the point where we take out this trend line, then I do think a world of hurt is going to come in line. So at this point, I don't want to be blindly short the market. I'm a big believer in not trying to hey, it's October, the markets typically roll over and die. That's true. Well, it's also an election year. Markets tend to magically hold up, into that election. So I'm just going to take the signals as I come. So the question then in this environment is, what are the kind of signals to look at? So a couple of things I like to look at here is a combination of the voodoo lines. Okay, so we got the voodoo lines here if you guys are familiar, but then also this is something that's new, and I just call it the auto fib levels. So throughout any given day, it'll automatically draw where the retracements are and stuff like that. And you can see in this case it kind of lines up. But in other areas, not so much, meaning that if you're in a no man's land in between, like, say, two voodoo lines, these come in really handy for buys and sells against those levels. And another example of this, and it's a little faded here, but if you can see it, so here are those auto fib lines. So today, the Nasdaq was coming down, about 47.91-ish, and it came right into that auto fib line, and we got the buy signal there. And then boom, this is one we called out in the class, had a great run, and turned into a very solid trade. I don't know if you guys can see that or not, but this turned into a very solid trade on a day when it was actually kind of pretty choppy, and we're trying to see what's going on here, and so that was a lot of fun there. So just a reminder, I will be doing a free webinar on Tuesday, September 20th, and I'm going to be talking about those auto fib lines, plus voodoo lines, plus the ready, fire, aim, and how they all combine together. And this week, even though it's a very volatile week, it was a pretty easy trading week using all these together, and they're essential for timing. So anyway, it'll be a free webinar. I'm going to show you specific setups that you can use, show you how they work. simplertrading.com/triple, and I think this is imperative, especially in the market that we're coming into. This is the kind of market where if you have 2 or 3 well thought out, well planned trades against key levels, you are going to be versus like chasing 10, 20 trades a week and reacting to the market, you're going to be much more calm, relaxed, you're going to be much more focused, and you're going to make a lot more money than someone that's out there chasing. And someone out there that is chasing and reacting to the markets is essentially providing liquidity for those of us that have well thought out, well planned trades against levels, and that's what we're going to talk about on Tuesday. You guys have a great weekend, and we'll see you next week.